The topic for today is, if I were you, what would I do? In the previous two videos, we have already talked about the advantages of the big guys. In video number 43 and 44, the best defense is to understand their conspiracy. Now we come to the best offense, is to learn when to get in and when to get out. In the stock market, believe me, it's very easy to get in. You just buy some stocks. The important thing is, do you know when to get out? Before we go further, there are the things you have to do to avoid wasting your time. First of all, stop wasting your energy for insider information. You know that you cannot get them. Don't follow the news or the analysis blindly. You have to read between the lines. You have to get real and get smart. Don't get too emotional. Don't follow the crowd. When everybody buys, you sell. And when everybody sells and when everybody is depressed, you buy. Don't entrust your money to any expert. Don't let people play with your money. That's the most foolish thing to do. If you don't know how to play with your money, you have to learn how to do it yourself. Don't admire analysts or any other person who produce technical information. They are just armchair theorists. They are not real. The real stuff, in fact, is the brute force of money. Very important. If you have the cash, you can make the stock market to go in any direction you want, because money makes the world go round. Now we come to the real thing. In this real physical world, it is governed by three forces, three dimensions of the real world: time, space, and people. These are the three things you have to understand. Your success depends on your being able to tune in with all three of them. If not, if you fail to understand these three dimensions, time, space, and people, you are nowhere. You are clueless. You are like living in a bubble. Let's talk about the time perspective. Every stock moves with a pattern. There's a short and a long-term pattern. You have to be able to get a sense out of it. That is, you must have a historical perspective of the price movement. You cannot just jump in at a certain point. You have to know what goes before it and what will go after it. So whenever you buy a stock, you have to ask yourself, when was the previous high and when was the previous low? These are the two very important points you should know. And then you try to make an intelligent guess, because nobody knows. All you need is to make an intelligent guess as to the next high or the next low. When we talk about space, we talk about all the things you can feel, you can see. That is the geography of the company, the environment surrounding the company, and its production facilities, market competition, and many other things. All the things that are real that will affect the performance of the company. Because the company's success depends on how well it deals with those realities. And nobody understands all of them. You don't need to. All you need is that you appreciate that this thing is very complex. It's a whole bunch of things determining the success of a company. Now we come to people perspective. The people perspective is the most powerful of all. Regardless of what has happened, people with a lot of cash to inject into the market can make it go round, can make it go crazy. And also the most complicated because it involves a lot of perception, different perceptions, a lot of emotion, conspiracy, and also the most important, the brute force of money directed by people. And we have to understand that the big guys with tons of money are playing this stock game in a very cold-blooded fashion. What they do is basically like this. They buy a lot quietly near the bottom. Nobody knows the bottom, but they know because once they decide to go in, that must be the bottom. So they have to buy it quietly because they don't want other people to know it. And after that, when they accumulate enough, they will continue buying. Because if you don't continue to buy, the stock doesn't go up. They continue to buy and they will start to do it noisily. Because when they do it noisily with news, then people will follow. All the small guys will follow. In that way, the price will be pushed up by you and me. And then when it comes to the high, the big guys will short sell it. Also, they will short sell it very quietly because they don't want you to know. And after that, when they decide it's time to go, they will try to unload. First of all, they try to unload very quietly because they want to unload as much as they want while they trumpet on the stock. And then after that, they will unload noisily because after that nobody can hide. So they do it with the news, and it's good that they do it noisily because they've got a lot of short sell at the high. So the more the stock comes down, the more they will win. And after that, when the price reaches the low level, they can go back in and they will repeat the cycle again. Finally, we come to small guy strategy. First of all, we understand that if the big guys want to push up the price of a certain stock, it takes time. It's going to take several months. Why? Because the public responds slowly. So it takes several months to seduce the public with all kinds of news and analysis, to seduce them to participate. The other time factor is the unloading, which also takes time and also several months. Why? Because if the big guys want to unload, they cannot unload it all tomorrow. Because if they do that, the whole price will collapse and that will cause them a lot of loss. In this way, the small guys only need to get in early on the way up. Now the question is, when? Well, when people feel depressed, when companies begin to stop bleeding after many months of losses, when the analysts are also not very sure or not optimistic about the future, when they are cautious, and when there are not much good news. Does this sound familiar? It sounds exactly like what we are experiencing now. Right now is really the quiet accumulation phase by the big players. Let me give you a few examples. Warren Buffett bought Goldman Sachs in late 2008 when the sky seemed to be falling. Bank of America bought Merrill Lynch around the same time, late 2008, when the sky was about to fall. So may I ask you, did you buy some stocks during that time? Probably not, because everybody was scared. But did you buy some in January and February when the stock market was at its lowest? Probably not. If you missed that chance, on March the 10th, things seemed to look up the first time. Did you buy some? And if you missed that chance, are you buying some now? Because things are still depressed. People still feel very pessimistic about the future. And this is a good time.